I'm sitting down with Kevin Wilson from LEEF Brands. We are here at the Benzinga Cannabis Conference, so I figured we would sit down and talk about the company. So Kevin, thanks for doing this.
Thanks for having me.
So Kevin, let's talk about LEEF, history of the company. I know it used to be private, then it became public. So let's give people some background on that, and then we'll just let it flow.
LEEF started as a private company. Like you said, we started selling a CBD wellness line back in 2016. In 2018, 2019, we built our extraction facility in Northern California and operated that for a few years. In 2022, we were acquired by a small public company called Investment Brands, and it was effectively an RTO, and so LEEF's management was the new management team. Rebranded it to LEEF Brands, and we've been a public company for the last couple of years now.
So when you did the acquisition, when you merged the two companies, what each group brought to the table?
So Icanic brought the public shell, obviously, and a bit of financing with it. They also had a CPG line called Ganja Gold and some co-pack capabilities. We've since kind of wound back our CPG presence, but we still have the Ganja Gold brand. From LEEF's perspective, we have the extraction facility up in Northern California. We have some successful brands ourselves, and so it made sense to bring the two companies together. For LEEF, we were looking to have some kind of liquidity event, whether it's going public or something like that. So it made sense at the time that we would pair the two together.
But now, since that time, the market shifted quite a bit, right? So what happened from that time in the market, from the acquisition to like now?
Yeah, I think, in 2018, 2019, you had these outrageous valuations for companies, some that were pre-revenue and raising capital at outrageous valuations. And it's like the pendulum was on one side, in an extreme way. And since then, we've seen it kind of shift all the way to the other side, where companies that are profitable, companies that have prospects for the future just aren't getting the time of day. I think some of that is cannabis fatigue, right? Every year we hear that we're going to get some kind of legislative action or something coming, and we don't, right? And so some of it's cannabis fatigue, some of it is people are just burnt out on the sector. They're not coming back into it. And so I think that's what we're kind of seeing, is that people have just kind of moved on to other sectors and kind of let these companies languish. I think companies like LEEF, we're listed on the Canadian Securities Exchange, and I think at one point that held a lot of value to cannabis companies. That's the only place they could have gone to raise money and be liquid. And I think that, as we get some of these new legislative changes coming up, you're going to see uplisting opportunities, you're going to see, new markets kind of come online. And I think that's going to bring some of the momentum back into the public company cannabis space.
In terms of your business model, so when you have a cannabis plant, you can make different products from it. Yep. So talk about what can be made from cannabis plant and what it is that you're making.
So the cannabis sector can kind of be broken down into two main segments, right? California's a $5 billion market at retail, and $2.5 billion of that is smokable flower products, and $2.5 billion is concentrate products, and that's really our swim lane, is the concentrate side. So we have three extraction lines. We have an ethanol extraction line, which produces distillate oil, so you'll get those in vape pens or edibles. We have a BHO hydrocarbon line, and that'll produce kind of your dabs and your live resins and those kind of products, your shatters, your batters. And then we have a solventless line, and so you're going to get live rosin, you're going to get product that was extracted not using any volatile substances. And so those are our three main extraction lines that we produce oil for. And then of course, those go into various products, whether they be edibles, vapes, different dabbable products.
Now, do you have your own brand lines, or do you white label for other clients?
Yeah, so we power a lot of the bigger brands in the state. So if you look at, the top 10 list of concentrate companies in the state, most of them are clients of ours in some way, shape, or form. Not necessarily 100% of their products, but some of it. And we did have CPG brands in the state. Retail, like being a brand and dealing with retail in California is very, very challenging. And so we wanted to be in every retail store we could be, right, with our brands originally. We kind of stepped back and said, what are we really good at? We're great at producing concentrates. So let's get into every retail store another way by powering everyone else's brands. And so that's really the swim lane that we stay in right now.
So from the point of view of a client that has a brand, why would they use you versus make it themselves?
Yeah, it's hard to do everything very well, kind of like we learned in being a CPG brand. And so I think that from the brand's perspectives, they don't have the capital to go build a massive extraction facility and deal with all the overhead that comes with that. They'd rather just have a reliable concentrate provider that can go empower their brands, and they can focus on sales and being a brand. So that's really the biggest upside. I think also working with LEEF, you're getting a consistent quality product and proven product. And so, yeah, I think that's mainly why a brand would rather deal with a company like LEEF than do it all themselves.
You also have one dispensary. How does that fit into the strategy?
Yeah, great question. So we have a dispensary in Palm Desert called the LEEF at El Paseo. It's a beautiful store, and recently we had, I don't know if you saw, we just posted it yesterday, Rudy Gobert and some of the Minnesota Timberwolves came over and saw it. It fits into the strategy because it allows us to really, whether it's new formulations or kind of new products, it allows us to R&D a bunch of stuff at our facility and then go to retail with it. Does this work? What is the consumer feedback? And then from there, we're able to kind of take that, aggregate that data and go back to our brands and say, hey, this formulation worked really well. You might consider it for one of your products. And so right now, that's basically what we use it for.
Looking at your financials, obviously on the revenue side, most of the revenues are, you kind of like a manufacturer contractor to others. So that's your revenue side. But then where do you get your ingredients to make what you make?
Yeah, so currently we source from over 300 farms across the state of California. And so we have a procurement team that pounds the phones, looks for product, goes out, samples. All of our product before it gets to our facility is sampled to make sure that it's free and clear and clean and can come to the facility. That'll change somewhat in 2025 as we bring on our ranch, Salisbury Canyon Ranch. We're going to start growing some of that. We'll still work with a lot of farms. But yeah, primarily right now we're working with farms across the state.
Talk a little bit about your ranch, your farm. When did you acquire it?
Yeah, so we found the ranch originally in 2020. And we spent the last 4 years going through the business license permit in order to get the land use permit. So it's a 1,900-acre ranch located in Santa Barbara County. It has a land use permit to cultivate 187 acres of cannabis. That makes it one of the largest land use permits in the state of California once it's all done and planted. And yeah, we spent the last year and a half specifically building out all the infrastructure, punching the wells, putting all the fences, cameras, everything up, improvements to our cannabis compounds, all of that, gearing up for a 25 crop.
So if I'm thinking about the land alone, is the land worth more with the licenses for cannabis than without?
Yeah, we believe so. I mean, anytime you acquire a property and put money into improving it and everything, it's gonna appreciate in value. And we've put significant improvements into it. And I think, you can say you built roads and you built wells and all this stuff, but I think that one of the biggest improvements to the actual land itself is these licenses and the value of them on the property. So yeah, I mean, I think the answer is yes, that there should be more value in the land than what it was acquired for originally. So
I guess the bottom line is that when you have a piece of land is what kind of product can you grow on it, right? And by licensing it to cannabis is a higher value product than, let's say, apples or something else, right? So if you were to, I know we discussed this before, but Can you talk a little bit about the possible ranges of value that this particular land can have?
Well, we're currently going through a valuation process, so, I hope it's as much as we can get for it, of course. But, we acquired the property for approximately $5 million. We raised and put in an additional $7 to $8 million, and that's on top of approximately $2 million to get the land use permit to begin with. So, about $13 million all in that we've put into the property. We did have an appraisal early on that put it in the $18 to $19 million range. That was pre all the improvements. And so, like I said, we're going through the process right now to kind of see what that looks like. And, hopefully we get a decent valuation.
What's the significance of how will your own production, providing your own ingredients, how will this impact your margins and maybe quality of the product?
Yeah, I think it's twofold, right? So one, we use approximately 220 acres today. That's what we kind of turn through. So if we were able to put 187 acres of our own products through the facility, or even, the first crops will be less than that as we scale into that number, we're going to get a level of consistency that we don't have right now. And what I just mean by that is, very simply, we're always going to be running at a certain level, right? Because we have that consistency. We're still going to be purchasing from partner farms and people that we're working with today, but there'll never be a lull that we sometimes encounter. On top of that, we feel that we can grow cheaper than we pay other people for the input material. And so in some cases, based on the seasonality, it could be as much as a 100% decrease in the cost of the input product. And so that's going to have a significant margin impact.
How can it be 100% improvement? Like if it costs you, 20 per pound to pay for it, you can't grow it for zero.
No, pardon me. So 50%. So we should be producing for around $10 a pound. When we talk about dry biomass, about $10 a pound. Input pricing right now that we're paying, it fluctuates based on the seasonality. We're somewhere between $20 and $30 a pound on average right now, and so it'll be a significant reduction to our input costs. You mentioned quality, so I think it's less about quality and more about growing the right genetics for the right yields. And so we'll have the ability to grow exactly what we need, knowing what line it's going to go into, so we can maximize the yields. I think quality is always, we're not running material today that we wouldn't be comfortable selling. So less about quality, more about yield increase, which will improve margins overall.
Let's talk about just in general the last few quarters. What are your margins right now, gross profit margins, with the fact that you're buying from others? And what is the approximate that you can get to if you grow on your own?
Yeah, so our concentrate business fluctuates between 30 and 40%. In Q1, we had an almost a 40% margin, or just over a 40% margin. And that Q1s generally are stronger quarter for a bunch of different reasons. But between 35 and 40% right now. We definitely feel like with the improvement of the yields and with the lower cost going in, also realizing that it's not going to be 100% of our supply chain, it's going to be a portion of it. We should be in the 50% margin range, 45 to 50% margin range here in 2025.
Right now, you don't have a lot of dispensaries. You only have one.
Yep.
But the way I understood it, when you grow your own ingredient, you can reach those margins without having dispensaries.
Yeah, potentially. Like if we had 30 or 40 doors or something like that, it would obviously be exponentially higher for sure at retail margins. You asked about capital markets, and we talked about the pendulum shifting and everything. When you're sitting in a position where you're trading at 1 or less than 1 times revenue, it's hard to do M&A deals to acquire more doors or something like that. But it is something we've looked at in the past and we've had discussions about. If you have significant volume like we do and you had a bunch of retail doors, yeah, you're absolutely right. You'd be looking at some very, very high margins. That said, for us to go and continue to power all these brands in the state with a low cost concentrate and go from a 35 to 50% margin, like there's room to grow if you had retail doors. I think it's stepping into that. If we can go do $40 million at 50% margins in 2025, making up numbers, then in theory your valuation goes up and you can start having those conversations about doing M&A, retail doors M&A in a non-dilutive way or a less dilutive way.
Okay, now let's talk about some of the regulatory changes. You said at the beginning that a lot of people are tired because we think something is coming and it doesn't. So let's talk about the rescheduling, what it is, and whether we're going to get it.
I'll start with what it is, because when are we going to get it is a loaded question. So cannabis is currently a Schedule I drug, and the current rule proposal that's being made is that it would go from a Schedule I drug to a Schedule III drug. The main benefits of that, on a high level, is the elimination of 280E taxation. 280E is basically, in a nutshell, doesn't allow you to deduct your SG&A from your taxable income. And so you have retail specifically, that all that overhead that they pay, and they don't get to take any of those deductions. And so obviously it affects all cannabis companies, but retail in a more significant way. So I think that, going from Schedule I, Schedule III is the first step towards, further change, whether it's legalization. We just had Vice President Harris say that she supported legalization. Former President Trump had some positive cannabis news recently as well. And so when are we going to get it? So there's a DEA hearing on December 2nd to discuss the rulemaking process. I was trying to delineate this today with a guy at the conference to kind of see what the timeline after that is. He seemed to think that if it was a positive action that they were to come up with, that it'd be shortly after, 30, 60 days, whatever that is. I think that, like I said, we've constantly been teased with some kind of change. I feel pretty confident that we're going to get a Schedule III change. But what's going to happen after that? What's the next step? Are we going to get safe banking? Are we going to get further tax relief? That's kind of the next step.
When the rescheduling happens, it seems to me that the cannabis companies from California are going to benefit a lot more than cannabis companies from other states. Why?
So I don't know that rescheduling in and of itself will materially affect California cannabis companies. I think the next step from rescheduling is hopefully it's some kind of interstate commerce, right? And we know that there's...
So rescheduling is not...
No, so when we go from Schedule I to Schedule III, it won't immediately allow interstate commerce, but it'll allow that conversation to start going further. I know that there's a West Coast pact of states that have kind of said, hey, we can make this happen. There's an East Coast pact as well in the tri-state area that has a very similar kind of, if we get this, then we can talk about that kind of thing. And so do we see interstate commerce in the near future? Potentially. And let's say that we do, and we can ship from California to New York one day. Why is California, operators going to win in that case? I think it's like Napa wine, right? We have the Emerald Triangle in California. People know California cannabis, California weed, right? And it's a desirable product. And so you're going to be able to market your product in New York and New Jersey and Florida as California sun-grown or whatever it might be. And so long-term, when we get interstate commerce, I think California cultivators and California companies start to win.
Investors often talk about companies having moats. So one of the moats is a brand. And of course, if you have interstate commerce, then branded California products have that moat. But also, California companies can grow it cheaper, right? Why?
For the same reason we don't grow avocados in Canada, right? Someone's going to say, oh, you grow in BC. I'm from Toronto, and you certainly don't have that great of a growing season in my backyard, at least, right? And so California is just that ideal climate where you're going to be able to grow quality weed. I'm not going to say year-round, but, in a longer season than you can in places like New York or even Florida, right? Great weather, harsh conditions. you're not going to grow great outdoor weed in California, or in Florida rather.
Okay, so from the point of view of a moat, you can have the brand moat, California, you can have the locational moat, but then you can also have the know-how moat, right? Like, talk about that in terms of like your clients are choosing you. Like, talk about that moat.
We have I think a couple different moats. I think entering the extraction business at this stage is very costly. It's a lot of equipment, build out, licensing, permits, all of that, similar to what we just went through on the farm. So that's obviously one big aspect of it is capital intensive. You mentioned the SOPs and the know-how. So like our group has, we have great extractors. Our head of manufacturing, Gary Vandenberg, does a phenomenal job with his team, just laying out like how we use the equipment in the most effective and useful way. And I was telling you earlier, right? We're developing some IP that we're going to hopefully be rolling out in the new year. And so Gary and his team are kind of developing how do we layer this into our current extraction facility so that we're maximizing yields and outputs, and at the same time increasing the level of quality. And yeah, we have a great team that does that. And as we develop more and more IP, we lower costs, we increase yields, and that helps to kind of increase our moats.
I forgot to ask you this. On the farm, cannabis is a difficult plant to grow. How do investors know how to grow it?
Well, thankfully, investors can be assured that I'm not growing it because I can't grow tomatoes in my backyard, so that's not happening. Much like we did with the extraction facility, right? We have the right people in the right seats that know what they're doing. We did the same thing on the cultivation side. So we brought on a group of consultants who have been there, done that, grow and operate a great farm. Actually, we press released at a certain point. So it's a farm called Lifted that we work with pretty extensively in California. Aside from that, a bunch of our founders are legacy farmers. So they've been doing this, not at the scale, of course, but they've been doing this for a long time. And so, we're surrounding ourselves with the right people who know how to do it. And that's why we feel we can do it right.
Okay. Any final thoughts?
Yeah, I think 2025 is shaping up to be a great year for us. We just put out this press release that we're done with phase 1 of the Salisbury Canyon Ranch. So we're going to be planting next year and expect a crop. I mentioned the IP that we're developing and working on. And so, we're pretty excited about that. We're looking to really nail what we're doing in California so that we can take that and move it to new markets and replicate this in whatever new markets, our clients are asking us to come to. And so, yeah, I think we're pretty excited for 2025.
All right. Thanks a lot for doing this.